Hello, I'm Hagen Rogers with Watermark Advisors. We want to have a video version of our Wired this week because of the charts that we want to talk about that are concerning about our economy. And the economy is affecting M&A and will, in a more significant way, affect the M&A markets in the upcoming months. I saw some headlines this week that were very concerning that several CEOs that we all know expressed concern as well. First, from CEO Jamie Dimon of JP Morgan, he said, brace for an unprecedented economic hurricane. Elon Musk said he had a super bad feeling about the economy. Goldman Sachs CEO Lloyd Blankfein said, Americans should brace for a dim economic future. Now, we know that inflation is the main headline here. So let's first start there and look at some details about the inflation. First, how did we get here so quick with inflation spiking to 8.54%? Two main issues. The injection of $5 trillion into the money supply since the pandemic began, combined with excessive stimulus packages, have led us to where we are today. Now, this is the CPI index you see here, and we're at an 8.54%. The average since 1980 has been 3.25%. So we've really seen a drastic increase. It was at 1.31% just 2 years ago. And just for reference, if we were to calculate the CPI like we did in 1980, we would currently be at 17.15%, which is a super high rate. In fact, higher than 1981's 14.6 rate. So we're at a very high inflation. And there's a widespread misperception that inflation is global. While many other countries do have high inflation, some do not. In fact, China, Japan, and Switzerland all have year-over-year CPI of less than 3%. Taiwan, South Korea, and France all have CPIs currently less than 5%. So the U.S. has a more drastic inflation problem than other countries. Now that turns us to the consumer sentiment, and it is also trending really in a concerning way. We see the University of Michigan Consumer Confidence Index plummeting to 58.4%. The baseline is 100 off of 1966. We were at 101 not 2 years ago. And the last time we saw these low figures, two previous times, one in the late 2011 time period, and then previously 56.4 in the Great Recession, or the start of the Great Recession in 2008. For reference, back in May of 1980, that was the lowest point of the Consumer Confidence Index at 51.7 when the country struggled with stagflation, which is what we are concerned about for the economy, the concern that we are heading into or are already in a period of stagflation. So with these consumer concerns, we can see that is rationalized by the spike in prices of our everyday products like milk up 15.5%. These are year-over-year figures. Bacon up 17.7%. Gas up 48%. Used cars up 35%. Utilities up 22%. And fuel oil up 70%. Now, we are in an energy crisis, and whether it's gasoline, diesel, or natural gas, they are all have been driven higher in the last couple of years, and it's affecting the entire economy. Just for reference, the average diesel fuel for the week ending May 30th was $5.54. Up from $2.36 just 1 year ago. That's a 72.6% increase. Natural gas has risen from $1.84 in September of 2020 to a staggering $8.87 per unit. Now this has a significant, natural gas specifically, a significant negative effect on the manufacturing sector because so many manufacturers rely on natural gas for their energy. This leads us to the concern that the Fed may not be able to achieve what we call soft landing, bringing inflation under control without crashing our economy. And again, the concern is stagflation. The last time we saw stagflation was the late 1970s. And so the problem there is we don't have the same balance sheet that we had in the late 1970s. In fact, our debt to GDP ratio has reached the highest in U.S. history. It is currently at 137%, which surpasses the historical high of the post-World War II years, and that is really concerning. In fact, again, this is not exactly a global problem. The U.S. has a more drastic problem than the rest of the world in that we are the third worst debt to GDP ratio of the G20 countries. So if we are heading into a period of stagflation, which we may be, and we have $30 trillion in debt, that is a big problem with inflation, stagflation, all the above. So this is all going to affect the M&A markets, and we have to start to think, how is it going to affect buyers and sellers? So we hope you'll come back and watch the next videos we're going to release along with the wires that are going to address those thoughts about how to handle M&A in a period of a recession or stagflation. Thank you very much for watching.